Hello, everyone. Happy Wednesday. How's everyone doing? Good morning, Dean. Good morning, Royal Palms. Good morning, Jacob. Good morning, Heinrich. Good morning, Anissa. There will be no Sterling today. He has an appointment. So, it's just us. Good morning to Rusty over on Rumble. And people in the background. There are people in the background over on Rumble, too. So, major news was the election results. Democrats pretty much clean sweep last night. So we will see. We'll see the shutdown longest ever, but we'll see if it continues because I think the Republicans are in a little panic mode now. Hello, Charles. This is not a channel about politics, though. I'm a independent libertarian, so hey, I just observe it. Good morning, OD Green. But it does affect the markets as we saw last night. S&P, NASDAQ coming down to the good old 50% harmonic and bouncing. We'll take a look at that. We will take a look at that. But before that, I hope everyone's doing well so far this week. We've had the little final pullback, the S&P closer to the weekly rotation zone, which is rising, so we may already be reconnecting if we do bounce. We had the mortgage stuff out this morning. We got ADP numbers, unemployment numbers we have right now, a little higher than consensus and popping up from the prior numbers. Those are for October. We have the S&P Global Composite and Services coming out at 9:45 Eastern. Then the 10 a.m. ISM. It'd be interesting to again watch for prices, employment, also besides the headline number. Headline still expected to be in expansion. The prior was right at the tipping point. Real important to see if the prices paid drop, but again, anything up here even at 68, that's still an expansion of prices, just not quite as rapidly as 69. I think the break even is around 52 on prices. 52 is roughly in line with close to flatter prices. Then we have the EIA numbers. EIA numbers. It's quieter this morning. Where is everybody? What? Markets with the pullback and nobody's interested anymore? All right. So we got Mickey D's bouncing after earnings. Actually, also did a percent B buy yesterday before earnings this morning and now bouncing. That was a little just minor bounce pattern. We got Google and Meta, Tesla. So we have sort of mixed Mag 7. AMD, decent earnings, but again, not mind-blowing given how extended it is. We had Palantir. Geez, did anybody see Palantir's or Planner Peanuts CEO up there yesterday on CNBC complaining his stock's dropping? And geez, I mean, it's dropping and wiping out 1 week of gains. And he's complaining about the short sellers. This is all absurd. These shorts are 2% of the float. It's literally under a day to cover. And he's complaining that the shorts are causing it, not not absurd PE valuations. The shorts are causing. It's another problem. We got too much corporate welfare and everything else going on. And corporate America is so out of touch with everything. What else? Good morning, Jake. So, there we have it there. Sectors. Everything's positive except industrials. Fed watch. 68% for another cut in December. Fear and greed. Oh my gosh, we're already back to extreme fear. Oh, look at the market momentum. This is fear mode. This is now fear mode. Things are so out of touch right now. I mean, we can't even. What's going to happen if you get a 30% drop in the markets when we do? Because we will. What's that going to be? You're going to see this as negative? Oh, no, the market's dirt cheap, 39.93. All right. Again, there weren't heavy earnings today. After the close, we just got Robinhood, AMC for people who still trade that. Qualcomm, that's going to be another key one to watch. And I guess, is Snap still a thing? Does anybody use that? I don't know. Tomorrow we got ConocoPhillips. Who else? Good morning, Ted. Why is everybody late today? Why are you late? Feels like a mini rant day. The rants come out of nowhere. You know what? So, more importantly, let's look at this. I hope, see, I like these sell-offs because it's good for teaching too. Where do we return to? See this blue line right here? Let me move this out of the way real quick. See this blue line, 50% harmonic, spiking down. We closed at the rotation zone last night. Don't get sucked into all the noise. Yes, it's important that we made a pretty key low, but we're bouncing back. Now we get the secondary harmonics. This reaction is going to be very, very key. We got cycles at the bottom. Technically not oversold on a closing basis. Going to be interesting to see how far, if this bar bounces back or sets up a percent B buy for tomorrow. If we don't rally enough today. I'm watching this trend line. And now my first target area on the bounce back is between the 50 and the 62 harmonic, 62.5% harmonic. We have the 6,800 area, which was support broken overnight. Coming back to the next little support base you see here. It's not on the chart, but you see it right here. Coming back to that area. All right. Bouncing up. So above 6,800, we spiked. We had the little percent B buy into the 4-hour rotation zone. Closer to that breakdown level from before and then reversing. So I said pay attention to the 4-hour rotation zone. We're now at the bottom of the 4-hour rotation zone. We start taking out the 6,800, turn into support. Minor targets, I'm looking at 68.25 area. Then I'm looking closer to 68.35. Then major is closer to 68.50. That's the 50% harmonic from the top to the bottom, the highs to the lows. Good morning, Andrea. Good morning, Mark. So that's the first key thing I'm watching. Now on this bounce, whether we bounce today, whether we set up a percent B buy and trigger it and bounce tomorrow, what's going to be key? If these lows maintain, I'm going to be watching again 68.50 to about 68.76. That's going to be the next rollover zone. We have a declining trend line here. If we can break the trend line, sorry for the dog snoring, we got 68.76 on a closing basis. Why? Because then we'd be out of the rollover zone, the major rollover zone of the secondary reaction back up. And then that would tip the probabilities back to 69.02 area, 6,900, 69.28. That's what's key on the secondary reaction. We have also, I'm going to repeat, held the rotation zone on a closing basis. So it's going to be very interesting to see where today closes. If we were to take out these lows for some reason, the key, very, very next key level, 66.95, and the 50 EMA is right there. Because remember, this area right here, between roughly the 67.50s and 66.95s was the major buy zone. And on the weekly, you see we got closer to the 8 EMA, but this, if we do bounce, this will pull the 8 EMA up and we'll have reconnected with the rotation zone. So that's what I'm watching for. If these lows don't hold, I'm paying closer attention to 66.95 to 6,700. If they do hold, I'm watching for the bounce play with eventually possibly retagging 68.50 in the declining rotation zone. The NASDAQ cycle bottoms coming back down. Let me move this briefly. You see 50% harmonic. Still closing within the daily rotation zone, so it'll be interesting to see how today closes. Filled the gap, which I said would get filled, the breakaway gap. We don't have a, I'm not using a trend line on the NASDAQ. I'm using a best fit line. It's not connecting the highs. It's going to the candle bodies. NASDAQ, if we can sustain above about 25,550, my targets are 25,675 area. Then we have another one about 25.8. And then which is right, we have about 25,840 is the 50% bounce level to 25,980. It's got to get on a closing base of about 25,980. Again, I'm talking for this week. Well, it could go into next week, but that's what I'm going to be watching, and a break above the best fit. If we roll over before then, it'll get interesting. Does all this make sense? How we can map out a game plan now with the secondary reaction. If we were to take out the lows, next target 24,998, so 25,000. And on a spike down, I'd watch 25,000 on a closing basis. On a spike down, I'd be closer to 24,900. But we have these lows, and we might be setting up a percent beat buy bar for tomorrow. Also, that does not mean we can't go long today. We finally played out a decent pullback. Please give me some feedback in the comments if this is making sense. The Dow, again, finding the key support about the second target. The Dow, I'm watching if it breaks above 47,325. On a set of Dow secondary reactions, let me just put on some purple here. The major area is 47,595, and then on a key closing basis 47,750. That's the rollover zone. If we close above 47,750, then I'll be watching to retest the upper harmonics and potentially break out to new highs if we can get above the upper harmonics. Russell coming down to 50 EMA, spiking a little below that, testing some key support at 2422 area. Possibly crossing down. So now very major resistance is 2463. On a spike above that, I'm watching the upper end of the first cross rotation zone about 2478. Might be setting up for a potential percent beat buy bar also on the Russell. All right, thank you, OD Green. This is how we map out a roadmap, so we're not in the dark. VIX, interesting enough, even with this sell-off, never got acceleration above 20. That's the key level I mentioned I was talking about yesterday. If we start backfilling now, dropping below 19, going to be watching for the continued bounce. The only thing that gets me into looking for a lot of selling pressure again would be if we spike above 20. DAX, look, this was a pretty key spike down to a minor support level and a key reversal here. Now I'm going to watch for a bounce possibly back to about 24,100. The notes, little run up in the rotation zone, rotating back down. We still have the massive double top pattern. So the yields briefly pulled back and now moving back higher. Forgot to, let me just double check this again. Yeah, that's not valid. It extended too far. But that's what we're looking at there. So I'm keeping an eye on the note futures, not the yields. But the yields are still tradable because now, again, first cross pulling back there, back above the 50 on the daily. We're closed above the 62.5, so I'm still looking for a target area of 4.162. Crude, still caught. Crude, right now, possible breakout above 61 for scalpy. Possible breakdown below 59.60 for support. If we break below 59.50, again, the gap fill, but this is very micro trading in crude. Gold, the 4-hour double, which confirmed but never triggered. We never got the triggered, went to the invalidation point. This, though, is a valid daily double now. It is not confirmed or triggered. The key point for the daily double now is first to confirm is a trade above 4,000. Just go to 4,060. It's 4,059.9. Easier 4,060. And then a close above that on a daily basis confirms a little mini double bottom. By the way, if it rallied up and closed above yesterday's high, it would be a percent B buy. Front run. Good morning, John. Okay, so that's the little still bounce pattern, and that only takes it back between the 50 and the 62.5 as the initial target, full target area. Does this make sense? You've made so much sense. I've shown up daily for the last 6 years, and I appreciate that, Ted. Why I'm asking people is because my whole goal here is to show people whatever tools you want to adopt, showing people how you can come up with a structure and analyze both sides and not freak out with the markets and come up with a game plan. A systematic game plan. Is it always going to work out? No. That's why you still have to manage reward to risk, but at least you can come up with a solid analysis technique. Copper, interesting enough, pulled back to the key trend, just dipping below it. But again, this is on a closing stop basis. Now going to be watching for a bounce. This is a secondary direction in copper too. So this is going to be key for copper. Dollar index. Hey, hey, hey. Hey, hey, hey. Has confirmed on it's confirmed even on the weekly basis. It's confirmed a massive double bottom pattern. It will be interesting to see if this triggers this week. It's triggered on a daily basis. Okay, I would actually not be surprised to see it pull back and not trigger this week potentially, and then rotate back up in the future. Either way, I'm still bullish. Right now, I'm watching for a potential topping pattern. I don't know if this double's now invalidated since the time I drew it. Little mini double top, which, yes, it's invalidated. So I'm watching first off a little pullback in the 4-hour rotation zone, but this is getting tired. Very overbought, cycles at the top. If we pull back, I'll be watching the 8 EMA on the daily and closing in roughly about 99.20, 99.40 on any pullback. We might have a percent B, I'll call it a sell for trailing on short term to watch for the pullback. Against, it's also now reconnected with the 200. This is the first reconnection with the 200 since it broke below it in March. How long have I been banging the drum on the dollar index? Euro, not yet to the 87.5. Might have a little. Is this still valid on the euro? Yes, it is. You still have a mini potential double bottom on the euro for a bounce pattern against the 4-hour rotation zone. And could take it closer to the daily rotation zone, but on any bounce, will be looking. If this doesn't trigger today, tomorrow might have a percent B buy, a very aggressive one, only for a bounce back. Then I'll be looking for another sell setup. Your markets, the markets will do what the good market's going to do, but it's key to analyze. Even you can analyze an irrational market. You can analyze, or your analysis can be rational. I wouldn't call this an irrational. How much is this, by the way? Because people like are freaking out. Remember, we're in extreme fear mode. We're in extreme fear mode. I mean, Palantir CEO is like having an absolute conniption. All right, we're down not even 3% from all-time highs to this spike low. 3%, 2.95% to be exact. And people are freaking out. Put this in perspective. This is how silly this has gotten. 3%? Not even 3% from the highs to the lows. Ugh. That's how it's insane. People can't even take a pullback anymore because they're so highly leveraged. If this is causing you to freak out, you're over leveraged. All right, spiders. Little gap down, still closing within the rotation zone. Came down over, at the pre and post market sessions, testing the key support. We're gonna get the secondary reaction. The low is going to have to be from the lows that are set on the open. Roughly, though, the key areas, again, between the 50 and 62.5, 66.80 to 66.84, we'll revise those. All right. Technically, if we had a massive rally, it would be a percent B buy above yesterday's high. Doubt that's going to happen. The Qs with the let me do this. Hold on. The Qs now with the extended trading hours, pretty much. I had to flip this the other side, by the way. Whoa, what did I do here? Oh, we played out the double with the extended trading hours. Okay, and we hit in the regular trading hours. We hit the first and second targets. So we're taking that off. There are some 4-hour percent beat buys also in the Qs and the spiders. You should know how to do that. So slight gap down still in the Qs. So on the rally, gap filled to 619.25. And still holding the daily rotation zone. Then put on your secondary reaction harmonics, please. Exactly. The market is always right. We have to trade what is. Bitcoin. The good old Bitcoin. The coiners. Double bottom. Triggered. First target area hit. Remember, this is a bounce play only into the 4-hour rotation zone. Bitcoin breaking down below key support, hitting the 50% harmonic. I think I talked about this. This was before it broke down. What did I talk about? Was watching if we did break down the 50% harmonic in that 100K. We did not close below 100K on a daily basis yet. And this is the bounce buy zone. Now, the secondary reaction in Bitcoin is going to be critical. And look how far off it's tradable on bounces, but man, this has got to get back above 116. Otherwise, it technically could still roll over. Ethereum also coming back down to the 50% harmonic from the lows in April up to the highs. Could be setting up for a bounce play only into the daily rotation zone. I tried rational analysis of my ex, but it did not make sense to her. Did it make sense to you, though? Remember, also with Bitcoin, the S&P and NASDAQ continued up to make new highs. Bitcoin and Ethereum, by the way, did not. Look at Ethereum's last highs were in August. So it's been diverging since August, and Bitcoin was at the beginning of October and has been dropping, which is, you know what, a pretty strong risk asset where your S&P went up through the end of October. What I'm also happy about is at least we've pulled back. So now we have a little better short term. Let me stress this: short term reward to risk to play a bounce. And if it turns into something more and potential end of the year rally, or I don't know if it'll make it, even if we get the rally through the whole end of the year. Also, you'll probably get a pretty decent, if they announce the shutdown's over, if they come up with some compromise now that the elections from yesterday are out of the way and they come up with a compromise, you'll probably get a rally back also. So it'll be interesting to see if it goes to new highs or not. What else? It's markets are open. Here was what Planners Peanuts was CEO was freaking out. The gosh darn short sellers. This. When the CEOs are blaming the short seller, this is a problem. This is due with 2% of the float short, which is under a day to cover. This is the problem. With a PE after, this is the PE after earnings release, 490. You don't think that's the problem? You don't think maybe your stock's a little too pricey? You're blaming it on the friggin' short sellers? You want to talk about irrational? There you go. There you go. Back to the breakout level only. NVIDIA, into the lower probability rotation zone. I mean, into the lower probability double. Good old pullback here. Then officially triggered. Broadcom not into the key. We'll be looking to see if we set up like a %B buy for Broadcom. AMD, here's your little pullback after it reached the harmonic extension, the major harmonic, reverse harmonic extension. Pulling back because, again, post earnings PE 149. Maybe still a tad pricey. Again, the companies are beating, but they're not justifying their valuations. Can it keep going higher? Sure, but look at this. Still nowhere near the weekly rotation zone. Trade cautiously, my friends. Tesla still has a potential weekly double top in play. But it's broadened out into stuff like you got Qualcomm, which is reporting today, which here's a spike up for simply saying, oh, we're going to build some AI chips to compete with NVIDIA. We're gonna start. Now, at least Qualcomm is trading at 17.43 and pays a 2% dividend. Back to key support. Qualcomm's at least not insane going into earnings. Can we check out the Nikkei? Yes. Here's your weekly. Oh my gosh, the sky is falling. The sky is falling. The Nikkei even gone. There's too much leveraged money. But That's a story for another day. Return to the bottom of the rotation zone, rotating back up. Still insanely overextended. But the secondary bounce, here you go. You should know what to do. What are you watching in the Nikkei? Well, the rollover zones between 58.87 to 51.332. The close above 51.332 puts it into the upper harmonics again. What if a bunch of these, because a whole bunch of things look the same. I'm wondering what happens if these come up here. You know, get in the double top territory and look at these massive potential. They're not even there yet. I'm just looking ahead. Because I think we will recover and retest the high areas, not necessarily new highs, but the high areas, which could then set up massive potential double tops on a bunch of markets, including like stuff like the NASDAQ, the S&P. Doesn't mean they'll ever trigger, but I'll be looking for it. So there's your Nikkei. All right, with that, again, really strong. The overnight lows are pretty strong, even on this pullback, like in the S&P. Watch around 67.75 on a little pullback into support. We got another reaction from the 4-hour rotation zone, which so keep an eye. If now we do take out this 68.05 area, then I'm watching for the bounce play. With that, I have to end the live stream. I have to get this phone call. So I will talk to everyone later. Bye for now.